Ever feel like you're on a roller coaster with Palantir stock? Well, buckle up. We're going to use that volatility and turn it into cold hard cash. In the next few minutes, I'm going to show you how to place an Iron Condor in Palantir stock and profit whether the stock moves up, down, or sideways. So, ready to dive in? Let's get started. Before we get started, be sure and hit those like and subscribe buttons down below. Also, download the free options workshop. We talk about the benefits of trading options over stocks. Palantir Technologies stock price has been on a wild ride. Just this month, as of December 2024, the implied volatility has reached as high as a whopping 83%. Let's break down Palantir's recent price movements. The stock price has skyrocketed from its 52-week low of $15 to a high of $80. Year-to-date, Palantir has surged an incredible 358%. In just the past month, it has gained 28%. Many analysts have a target much lower. As you can see, the one-year estimate on Yahoo Finance is just $41, and it's currently way above that at $76. So you can see it's quite volatile. This volatility isn't just numbers on a screen. It reflects the market's sentiment about Palantir's potential in AI and data analytics. With the stock's rapid ascent, we're seeing a mix of excitement about Palantir's growth prospects and caution from some analysts who've maintained an underperform rating. Higher volatility means higher risk. However, it also opens up opportunities for strategies like the Iron Condor. So stay tuned and we will jump in right now on how to exactly place those trades. So Darren, what's an Iron Condor? Well, an Iron Condor is a neutral options strategy that combines 4 option contracts with the same expiration date. So we sell an out-of-the-money put option, buy a further out-of-the-money put, and then we sell an out-of-the-money call option and buy a further out-of-the-money call. So we are basically selling a put credit spread and a call credit spread. This strategy is designed to profit when the underlying stock trades within a specific range prior to expiration. The key characteristics of an Iron Condor are limited risk and defined profit potential. The benefits are from time decay and the decreases in implied volatility. It's ideal for traders expecting minimal price movement, and the max profit occurs when all options expire worthless. By the way, if you'd like to receive the free Options Strategies Trading Guide, comment Options Guide down below and I'll send you the link. The Iron Condor's name comes from the profit and loss diagram, which resembles a bird with outstretched wings. Again, this strategy allows traders to potentially profit from a sideways market without taking a directional stance on the underlying asset. Yeah, not too sure about that bird thing. Let's talk about setting up the Iron Condor option strategy, as selecting the right strikes is crucial. We consider delta by looking at options with a delta around 20 or 30 for the short strikes. This provides a balance between premium collection and the probability of success. We evaluate the premium. We look to collect about 1/3 the width of the strike prices as the premium. For example, if your spreads are $10 wide, we aim to collect around $3, $3.33 in total premium. We try to balance the risk and reward. So the wider spreads between short and long options increases potential profit, but also increases max risk. We want to find a balance that fits your risk tolerance. Consider underlying asset volatility. For high volatility stocks, choose strike prices further from the current price to increase your probability of success. And finally, I try to aim for equidistant strikes. While it's not always necessary, having your short strikes equidistant from the current stock price can help balance the risk. Let's quickly look at the max profit and loss, and then we'll jump into the live trade on the option trading platform. Now, the max profit for an Iron Condor is limited to the net premium received when opening the trade. This occurs when all options expire worthless, which happens if Palantir's price remains between the short strike prices at expiration. The max loss equals the width of the spread minus the net premium received. All right, guys, here we are on the Tasty Trade option trading platform. There's a link down below. It's a great platform for trading options. I use this and Moomoo. I've got a link for both down below, and there's benefits if you click through my links. So check them out if you're not using them right now. And we will jump into the trade on Palantir, the Iron Condor. We punch in PLTR, which is the ticker symbol for Palantir Technologies in the upper left right here. And then we're going to go, I like to go 30 to 45 days out. So we're going to open up the January 17, 2025, which is 33 days to expiration. You can see here in the middle. So we click on that. Now, again, we're on the trade page and table mode right now. So click on the January to open that up. And this is prior to earnings. It looks like earnings they've got coming out on February 3rd. So this is nice because it's high volatility while at the same time it's prior to earnings. So it should stay between that range. Let's look really quick though at the chart before we get started. And you can see, look at this huge move up. I've got the 1 year chart up here and then the RSI up here. You can see it's up over 70. So it's in that overbought range. So I expect it to come down a little bit. It's had a huge run up due to the volatility. However, for the same reason that it ran up, I think it's going to trade in a range. So it may drop a little, but it's not going to go back down below these levels, back to where it was in that 15 range. I expect it to trade in a range right now since it did have a big recent move up. So on the trade page again, we've got the January chain opened up. The stock price is $76 and IB rank 62. So we're going to look to, we've got puts on the right, calls on the left. We're going to sell the, let's see, the 22 put. So the $2, right here, we click on the bid to sell the 67.5. So 22 delta, but it's the 67.5 short strike. We click on the bid to sell that, and then I'm going to go $10 wide. So I'm going to buy as protection the 57.5 put option. So this caps our loss, and we're $10 wide. We collect $1.66 for this, so that's our max profit, and our max loss would be the width of the spread, $10 minus $1.66, which is $8. Here's the max loss right here, $8.34. So it's $834. We collect $166 because one option contract controls 100 shares of stock. So we've got to multiply that $1.66 times 100. Now let's go to the call side and sell the call credit spread. Now calls are on the left side here of the chain, and we're going to sell or hit the bid on the, let's go out to about the 90 delta because we are a little bit high right now. We had that big move up as we saw on the chart right here, big move up. So I don't expect it to go way up too much further, but let's go on the 90, which is the 26 delta, and then we're going to go $10 wide and buy the 100. All right, so now we're collecting $2.73 for this trade, and we can hit review and send and place the trade. However, you know what? Because we've had such a move up and I don't expect it to explode up, I want to collect around a third the width of the strikes. So we can't lose on both sides. We could only lose on one side. But if we go to the 85, and what I did there was just move it up, and then the 95. Now we're collecting $3.30. So $330 we're collecting when we hit review and send and place this trade. That's deposited in our account. So this is the trade that I like right now, and I'm putting on tomorrow morning, Monday. It's Sunday right now, but when the market opens, I'm going to throw this on. And if we go to the curve mode right here, you can see the profit range and 75. So we're profitable out to this 88 and about 65. if you hit the analysis, it really breaks it down further and shows our break even. So yeah, actually 64 because we're collecting that $3.30, the $330. So 64 up to 88. Now look, if we look here and we go 64, let's move this down. 64 right here, and then 88 right about there. That's a huge profit range that we have when we place this trade and we collect $330. And we don't have to wait the full 33 days. This IVR may come in, it may not, since earnings isn't until the following month. But as time goes on, we make money every day that it stays within this range. We hit review and send and place the trade. All right, guys, be sure and hit like and subscribe down below. Download the free options workshop. Let me know what you're trading. Ask a question. Definitely leave me a comment. And if you've made money in the last week, let me know what it was in and how you did it. All right, thanks for watching. I'll see you in the next video.